Look, I need you to think about something for a second. You get paid every 2 weeks, right? And every single time that paycheck hits, you tell yourself, okay, this time I'm going to invest some of it. But then rent is due, there's that subscription you forgot about, maybe you grab dinner with friends, and before you know it, the month is over and you invested exactly $0. Here's the thing though, you're not broke, you're just timing it wrong. And that timing difference, it's costing you way more than you think. So here's what most people do. They say, I'll invest $400 at the end of the month when I see what's left over. Sounds reasonable, right? $400 a month, that's $4,800 a year. Solid plan. But here's what actually happens. Life happens. Your car needs new tires, your friend's getting married, Netflix, Spotify, that gym membership you forgot about. And suddenly that $400, it's $200 or $150 or nothing. Now, what if I told you that investing $100 every single week, same $400 a month on paper, could leave you with tens of thousands of dollars more after 20 years? Not because of some complicated strategy, just because of when you do it. I know what you're thinking. $100 weekly versus $400 monthly, that's the same money. Mathematically, sure. Psychologically and practically, completely different game. Let me show you the actual numbers because this is where it gets wild. Let's say you're 30 years old. You want to retire at 50. Give yourself 20 years. Average stock market return historically is about 10% annually. Here's what happens. The monthly person. You invest $400 at the end of each month. After 20 years, assuming you actually stick to it and don't skip months, you'd have around $304,000. Not bad. The weekly person. You invest $100 every Friday, like clockwork. Same $400 a month, right? Wrong. After 20 years, you'd have approximately $327,000. That's a $23,000 difference from the exact same amount of money. Wait, how is that possible? Dollar cost averaging on steroids, my friend. You're buying into the market 4 times more frequently. When the market dips on a Tuesday, you're buying that Friday. The monthly person, they miss that dip entirely and buy at month end when prices recovered. But here's what nobody talks about. That's just the math if the monthly person actually invests every month. And statistically, they don't. A study from Vanguard found that people who automate weekly investments have an 87% consistency rate over a year. Monthly investors, only 64%. Think about why. When you set up $100 to pull every Friday, it's like your gym membership. You don't even think about it. It's gone before you can spend it. It becomes invisible. But $400 at the end of the month? That feels like real money. That's a weekend trip. That's a new gadget. Your brain sees that $400 and goes, well, maybe just this month I'll skip it. Here's the thing most people miss. Investing isn't actually about having money. It's about not noticing the money leaving. The weekly person isn't richer, they're just better at tricking their own brain. It's like the difference between losing 25 pounds in a month versus losing 1 pound a week for 6 months. Same result, but one feels impossible and the other feels doable. Now, let me tell you what really changes everything. It's not even about the dollar cost averaging or the psychology. It's about this. When you invest weekly, you become an investor. When you invest monthly, you're someone who tries to invest. The weekly person checks their portfolio every Friday when that $100 hits. They start learning. They see patterns. They understand volatility. By month 3, they're reading about index funds. By month 6, they're explaining compound interest to their friends. The monthly person, they set it up once, forget about it, and check back in 2 years, wondering why they only have $3,600 instead of $9,600. One builds a habit, the other builds a hope. So here's what you're going to do. Not think about doing, do. This week, open your investing app, set up an automatic $100 transfer every Friday or Wednesday. Whatever day you want, just pick one day and make it automatic. You won't get rich overnight, but in 20 years, when that $23,000 difference is staring you in the face, you'll remember this video. Because here's the truth nobody wants to hear. The best time to invest was 10 years ago. The second best time, next Friday. Your move.